If you look at the big picture here, Tesla is the leader by far in market share for battery electric vehicles. We've seen them have great success in China, a market in which it's typically been historically not easy for a foreign company to wholly own a factory. For instance, Tesla's the only company to do that, and their brand power is really great there. I'd say longer term, we see them scaling like crazy. They're building up in Berlin and Shanghai and Austin. There's been recent talks of India. I think what we should be thinking about is whether or not the traditional automakers will be able to catch up to Tesla.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you're sick of videos relating to Tesla's Q4 and full year 2020 earnings, see you later. For everybody else, in this video, I'll be reacting to some comments from Ark Invest Tasha Keeney on Tesla's Q4 earnings. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Shares of Tesla in the post-market are down about 4%, not as much as when the earnings report first hit. We're going to talk about this earnings report with Tasha Keeney, Ark Investment Analyst. It's good to have you here and help us understand. I get it. They missed on their earnings per share. Adjusted, it was 80 cents. The street was expecting $1.01. But look, they grew EBITDA. They grew revenue. What is the message the investors are saying to Tesla? Not enough, not good enough. I mean, they give Tesla a pass all the time.
It's funny you say that. In my experience covering Tesla, I can't say that the company, it doesn't feel as if it's always gotten a pass.
Well, Yahoo Finance certainly embodying their name today. What is this guy talking about? Wall Street usually gives Tesla a pass. I have to commend Tasha Keeney on how delicately she responds. I mean, if I was live on air on Yahoo Finance and I heard that, my instant reaction would have been, what the fuck are you talking about, dude? Are you high? I am, but are you?
I feel like this year, what we've really seen change is that, so first I should say at Ark, we're focused on the long term. We're focused on disruptive innovation. Tesla is a leader in electric vehicles and autonomous technology. We think they're at least three or 4 years ahead of the competition. And so I feel as if the street has definitely realized that they're a leader in EVs. That's been the big change this year. We've seen a lot of analyst notes recognizing that. I think this particular quarter, the miss on EPS, well, long term, the research that we've done on electric vehicles shows that battery costs should decline over time. We use something called Wright's Law, which says for every cumulative doubling in production, you get a corresponding reduction in price. We expect those costs to decrease. That should help Tesla's margins over time. So I would say quarter to quarter, we're not too concerned about any specific miss on that line necessarily. We're really looking at that long-term picture.
It never ceases to amaze me how short-sighted the mainstream finance media are and continue to be. Every time I see someone from Ark Invest appear on one of the mainstream finance media networks, it's the same stuff. There's this push-pull, this tug-of-war between short-term on the mainstream finance media and Ark Invest, whether it's Tasha Keeney, Kathy Wood, or someone else going, hey guys, we're kind of long-term focused. We care about the next 5-10 years, not tomorrow, next week, and next month.
Hey, Tasha, one thing that could be weighing on the markets here, our colleague Jared Blickery just flagged this here for us, is the fact that we didn't get any specific guidance when it comes to production targets. I guess, what are you looking for? And what do you think is needed just in order to meet the street's expectations on that?
Yeah, so they did say that they expect to grow at a 50% rate instead of giving a flat out target. But I'd say overall, I mean, if you look at the big picture here, Tesla is the leader by far in market share for battery electric vehicles. We've seen them have great success in China, a market in which it's typically been historically not easy for a foreign company to wholly own a factory. For instance, Tesla's the only company to do that, and their brand power is really great there. I'd say longer term, we see them scaling like crazy. They're building up in Berlin and Shanghai and Austin. There's been recent talks of India. I think what we should be thinking about is whether or not the traditional automakers will be able to catch up to Tesla.
This is another great point from Tasha. We already know Tesla has won the decade. The real question now is which, if any, of the legacy automotive manufacturers will actually survive the decade. Never mind who will be in second, third, fourth place, a very distant second, third or fourth place I might add. Who will actually even survive the decade? This isn't hyperbole. I'm not being dramatic. This isn't me being an alarmist. I actually genuinely believe that the majority of legacy automotive manufacturers will be bankrupt, will be acquired, or will merge with other companies before the decade is out. The writing is on the wall.
Because we really do think that electric vehicles are the way forward. They're already lower on a total cost of ownership basis. And given the cost decline we see in batteries, we expect those sticker prices to come down. And actually, I should mention, we just put out some research today, our Big Ideas report. My colleague Sam Kors has done a lot of great work on these battery cost declines. So all of that is in there. And I think what people are maybe missing in the Tesla story is still this autonomous technology piece, which is what I cover. I think that Tesla released this beta full self-driving update to vehicles. I'd be excited on the earnings call to see sort of what they have planned next there. But we think that the opportunity in ride hail could give them a recurring revenue stream with much higher margins than the traditional auto business. So if you're thinking of that margin line, that's something to look out for sure.
I think in general, most investors are overlooking Tesla's high margin revenue, especially the future revenues, not just from full self-driving software packages being sold, but also from robotaxi fares and even more importantly, infotainment. And the updated Model S and X refresh, including new interiors, gives us an important hint into how confident Tesla is that they will soon have sold fully autonomous driving. Why do I say this? On Tesla's earnings call, they announced an upgrade to the Model S and X, a new refresh. People have been waiting on this a long time, and there's some very interesting clues within the vehicles, including this hero pick here, the center console showing Witcher 3 video game on the center console. Now, let's read some more details about this and try to learn what's going on here. What hints has Tesla provided that they believe they're very close to solving fully autonomous vehicles? With high resolution, ultra bright colors, and exceptional responsiveness, the new center display is an ideal touchscreen for entertainment and gaming anywhere. And wait, there's more. Game from anywhere. Up to 10 teraflops of processing power, which is equivalent to a PlayStation 5 console, enables in-car gaming on par with today's newest consoles via Tesla Arcade. Wireless controller compatibility allows gaming from any seat. That is the mic drop moment. I'm going to ask a few questions and see if you guys can connect the dots. What are you going to do inside a Tesla as a driver or passenger when autonomy is solved and the driver no longer needs to pay attention to the road, nor do any passengers whatsoever? Spoiler alert, you're probably not going to be staring out the window. Good thing Tesla's included a couple of screens in the vehicle, isn't it? Another question, why would Tesla basically embed a gaming console inside the vehicle and have multiple screens and enable wireless controllers and gaming from any seat within the vehicle if they didn't expect that people would be able to game from any, including the driver, seat in the vehicle? Just asking the question.
I know a couple of Tesla owners who just brag and adore these vehicles. One of them, my older brother, and I always tell him, keep your hands on the wheel, because he uses the self-driving feature, even though it's not intended the way I think he is using it. Sorry for calling you out, Danny. But they just dropped the price of the Model 3 in China. How much lower, though, in the US and in, for instance, Europe, will that price target have to be for them really to, I'm sure the traditional automakers are worried, but to really start sweating?
Yeah, so the question is, when do we see this price parity point? And I feel like the price of the Cybertruck sort of already surprised, and I think gave us a really great indication that we're getting there. Tesla at Battery Day this year announced that they're going to produce a $25,000 car. And we know that the changes that they're making to their batteries, in terms of this, this structural battery, basically, the cell to vehicle versus cell to pack. This is going to make a big difference in terms of cost and range. So basically, you're going to be able to offer a longer range vehicle for lower prices. So that's supposed to happen over the next few years. That $25,000 car, and I think that's what people are looking for in terms of this mass market vehicle that's much cheaper than a gas-powered car, because gas-powered cars are only getting more expensive with emission standards. They're not riding that cost decline curve that we see in electric vehicles.
Once again, a great point here from Tasha. I don't think most stock investors, whether it's retail or institutional, truly appreciate the declining cost curves of Tesla's batteries versus the flat costs of an internal combustion engine. See, here's the deal. The internal combustion engine price is basically remaining flat. The electric vehicle price is steadily and predictably declining over time. Run the numbers forward. See what happens. Obviously, electric vehicles soon become much cheaper to purchase than internal combustion engine vehicles, and they don't stop getting cheaper from there. By the time Tesla releases their $25,000 mass market vehicle, the ICE industry, the internal combustion engine vehicle, is dead.
And on top of that, in terms of performance and range, Tesla is really unbeatable today. So again, I think they still have a comfortable lead there.
Hey, Tasha, we only have about a minute left here, but my question to you, when it comes to Tesla's stock price, I guess, how much do you think fundamentals matter versus whether or not it's all about growth and some of these lofty goals that we're getting from Elon Musk?
So I would say with disruptive innovation, you have to look at that long-term picture. So I think, and that does affect the fundamentals again, because those cost declines should enable better margins in the long term. So I think in terms of goals, we're looking at how quickly they can scale. What sort of advantages they get from these battery improvements that they're making over the next few years. And then I said autonomous technology, I think is really an opportunity that's not well appreciated today. And in fact, we've done some work to say that Tesla could even launch a ride-hailing network with human drivers ahead of robotaxi launch, and still get that recurring revenue line at a great profitability point. So I think that's something that could happen in the near term, even if you don't believe that Tesla is going to create a fully autonomous car.
Last I heard, Elon Musk had mixed feelings about launching the human-driven ride-hailing network initially. Maybe that's because he believes that full autonomy is so close, there's no point even bothering. But I think initially they're going to have to start the network with human-based drivers anyway, just to iron out a few kinks. Maybe I'm wrong. Who knows? What do you guys think? Let me know in the comments below. Will Tesla launch a human-driven ride-hailing network before launching their robo-taxis without human drivers? Or will they leap directly to autonomous vehicles and skip the human beings altogether? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.